The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour, last day of the week, May the 16th, into the second half of the month. Very interesting. Interesting session today. Dow's down 5 at 60,444. S&P's down $1.36 at 1869. Let me move this away and I can give you the rest of the numbers. Whoops, I can't give you the rest of the numbers unless I get rid of that. And here we go. The comp index is down 14 at 4,056. Gold, and this is very interesting, the GLD is down just a little bit. It's down 19 cents at 124.58. Gold is having a tough time, but it's holding within a trading band right now. My bias right now is still to think of it as going lower. We'll see. Gold itself is up $1.20 at 1294.90. Silver is down just a tad. It's at 19.40. High-grade copper is at 3.1. Dollar is down a fraction, and the dollar's acted very well, but just stalled out the last 2 days. And you've got bonds. Bonds are up 230 seconds at 137 and 2130 seconds. So that, to me, says something very interesting. But I'd like to do something first, because Friday is Technical Friday for the Chapman Wave methodology. I thought I'd just show you something in terms of looking at time frames, how time frames can give you just such a different feeling. Look at this one. This is, I'm not going to even tell you what it is. You probably can't see from, if you're looking at Tiger TV. Let me just do this right now. I'm going to go to that, back, and grab that, back again, one more. And then I'm going to go right to the front page of TFNN, where it says, get Tiger TV on your handheld, but you can get it on your laptop anywhere. You just go clickety-click, and there it is. And I just wanted to see how you can see the charts. So that's important. Is that being covered? No. Okay. So what we're looking at here is the 2-minute chart. Back at about call it 6:30 this morning, there was a low of 1862, round number low, in the E-minis. And it goes peak A, pulls back, makes an A underneath the previous A. Remember the Chapman Wave methodology? Identify the lowest, most obvious low bar. Start your wave count. Count to at least peak D, 4 higher peaks. Make them capital letters so you know you're going in an uptrend, lowercase when you're going the downtrend. So what do? We go peak A, B, C, and then there's a beautiful double top D right there where the MACD turns around. Stochastic isn't able to hold above 80%. It plops, goes below that green line, which is a 200-period moving average, comes back down in a trough A, B, C, and then starts a brand new move and goes peak A, B, C, D, and goes to a higher high. And that higher high actually turns out to be the high of the day so far, 1871.50. I say so far because I'm going to explain something that might happen, but this is the way I like to put things together. So that's a 2-minute chart of the June E-mini S&P 500 June future. It pulls back very sharply from that 1871.50 area, and it comes down in trough A, trough B, trough C. That trough C makes a double bottom. In my work, in the 2-minute chart, you can still count that double bottom as A, but it actually makes another little A underneath it. It does the same as it did before, and it goes A, B, C, D. D doesn't get above that former peak C minus arch formation that failed back at 2 minutes past 10 this morning on the 16th of May at 1868.75. But what happens is, it pulls back and goes to a lower low. Makes that double bottom. I love that double bottom because that's the dreaded H, the lowercase h pattern. That turns into a successful H. And what happens is that double bottom at 1861, was it 25? 1861.25 times 2, let me type that in, 1861.25 is acting really nicely. But before we go any further, let me show you something else. In the 5-minute chart, You see, I'm looking at time frames. Treat the 2-minute like it was a daily and the 5-minute as if it was a weekly, 5 days or whatever. And look, you went from that low that I was talking about at 6:30-ish to peak A, B, C. That 200-period moving average became strong resistance. It goes to a D, pulls back, holds the maroon line, that 9-period exponential moving average, and look what happens. It goes to a D and then an E. That E, which is that 1871.50 high that we saw as peak D in the 2-minute chart, makes a high, pulls back very sharply, takes out the previous low, and goes to a low of 1861.25, a double bottom. That makes a peak A with an H pattern. Remember the H pattern? Maybe I'll get my CD out just now to be able to show you what I'm talking about if you're not used to this. That H pattern, lowercase h, looks like this, H. The reason why I want to bring this up, we're going to see that in the weekly bond chart. So here we go. You've got this lowercase h pattern, which could turn into an M, but it doesn't. What it does is successfully rallies and goes above the arch high, that high of peak A at 1865.75 in the 5-minute chart, and it runs to B, pulls back to the 9-period moving average, and it's just about to make a leg C. It has just made a leg C. I love when we do these things in real time, and you can see without obfuscation, without anything happening. Now I can take the plus sign. I can say there should be an up arrow, and that up arrow should give you at least a peak D. A leg C goes to a peak C because it makes a lower high bar, and then we turn around and we see a pullback and it goes whoops back to D, and there's a good chance that in this particular pattern we're looking at here, I'm saying a good chance, we don't know, but we will have a much better idea if in fact the stochastic, which is 74%, goes to 80% and then holds. Why? Because then I can later on in the show, I can go and we can do a 10-minute chart together and see where that is, because the 10-minute chart, as far as I'm concerned, right now should also be in leg C. But we'll get to that. I wanted to go through this because I want to show you something that's very interesting. Bonds have just stalled out here, and in a leg D, maybe a peak D in the daily. That's the bonds, the June bonds. A peak F in the 120-minute chart. Let me move this away so that we can see what's going on here. Question in the den. I'll get to the questions in the den. I'll get you a lot of things. I do want to show this. Get rid of this right here. Okay. Well, look what's happened in the weekly, that's a leg E, I believe, in the weekly June contract. But look at the TLT. Remember I drew this in ages ago. When I say ages ago, I'm talking about in 2013. Look, the H pattern that went to an M pattern, and then the right leg on that other side held beautifully on that 9-period moving average. And I did this the other day, especially for diagrammatic reasons. I made the 9-period moving average a huge, big, thick black. The width is it's big. And I especially did that because I want to show the importance of certain techniques that I use, why I use them, how I use them, and how you can benefit. So this is now leg D. And it says at this particular point, be prepared that there could be a pullback. There doesn't have to be. It just says be prepared. Have a good look at your technicals. Well, what do the technicals say? Looking from the top down, it says that the candle hasn't closed. I can't talk about the weekly candle until 4 o'clock today. So far, it's very strong. It is giving not nearly as strong a candle as the candle that on the downside of June, the week of June the 21st, when it plummeted from 114.08 down to 108.37. But it's into that bar, the 114s, because the high today is 113.96, number one. Number two is the 9-period moving average is 110.89. And that says that will be the level that you've got to watch in the next week or two, because if it undercuts that and closes below it, then you've got to watch the MACD, which the fast-moving average, that green line, has just been absolutely fabulous. Look at the histogram. Look at those green line, vertical line. Those lines there are volume, the gray ones. these green lines are in fact, the green lines right now are in fact, I'm just double checking something. Yes, the green lines are the histogram. I just wanted to see, I didn't put in a left, I did put in a left, oh, the left side, right side, shorter term time price match has been taken out. The next one would be right here. I had a question about this. I'll just do it now. And where would I take it to? I'm not going to take it to the same level. No, I will for now. I'm going to take it to exactly the same level right there. It's this bar right here. And I'm taking it to the right side. So here we go. Right side says new parallel, green. And that says it should run into next week. And there's going to be tremendous resistance in this candle right here at 116.79. I actually don't think it's going to go there right now. But I'm only saying I don't think so. I have to tell you that if, in fact, this counter-trend rally stalls out and by Monday or Tuesday there's a big turnaround to the downside, bonds will go higher. I'm watching this really closely. There are a couple of things that have made me, when I did my homework last night, I was kind of impressed at some of the support. I was impressed that the volatility index moved up, but it didn't really skyrocket. I was impressed that the IYR held. It hasn't broken out on the upside, but it is holding, and that's the REITs, the U.S. commercial REITs. There are a couple of things that said to me, I need a little more evidence to say that we're going to go down huge. We definitely look very weak at this particular point, that we should be making lower lows and lower highs. But there are a couple of stocks that are holding well enough for me to say, hey, that's kind of impressive. So back at the ranch, what we're looking at now, I'd like to go back to our 2-minute chart just for a second. There's that trend line that I had drawn in earlier. And this match right here, I can start putting in because I ran out of time because the show was about to begin. I usually try to do this while I'm trading the futures. When I decide to trade the futures, there should be another bar or two on the right. I'll put that in right now. I want this to be live. I want you to be able to see the methodology involved. I don't want to say it's locked in stone because it's absolutely not locked in stone. There are moments where you absolutely have to use some subjectivity. I don't like that. But the core, the root, the foundation of it is really locked in stone because it repeats so many times over and over that that's all I can say is that this line must come down just a tad. There. Okay. So those are the resistance levels we'd be looking at. We've gone to a leg E/A in the 2-minute chart, and the 5-minute chart is now in leg C. Maybe it'll make a peak C here. We'll see. I haven't had a chance to join the left side, right side, maybe during the breakout ball. We will go to our callers as soon as I get back. Mike in Ormond Beach will be with you as soon as we hurry back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, Basil Chapman. Be back in 1 second there. Just finished the chart question again about FNF. I've never done this. It's the first time I believe that I'm looking at it. Fidelity National, but I'm going to go to Mike in Ormond Beach first. Hi Mike, how are you?
Good.
Oops, you there?
A lot of times too busy to follow what you're doing. I wanted you to confirm where we are in the longer-term monthly charts, like of the major indices, the Dow and the S&P.
Oh, okay. All right, here we go. Very good question. This is a perfect time to do it. Middle of the month, we've had some volatility, and here we go. The Dow itself is in leg E, having made a new all-time high this month of 16,631. And let me just double check, 16,735. That was a mistake. Sorry, I meant 16,735. That's what I wanted to check because in my back of my mind I said, wait a minute, whoa. I had not updated. 16,735. So that is leg E.
If you look so that's leg E in the monthly, correct? In
the monthly, yes.
Okay.
Now, can this be a recycle? I'm going to need a lot more evidence to say that it's a recycle and it's not a brand new E/A. At this point, I have no qualms just calling it an E and saying let the chips fall where it may. So here's what I'm looking at. So I wanted to do this because I've had a number of callers over the last year or so saying, what should we do in our much longer-term outlook? And my much longer-term outlook says we should go to higher highs probably later in the year or sometime next year. But in this particular move right now, because I have so many monthlies, and I have to even include the XLF in leg, whoops, I typed in the wrong place. The XLF, that's the financial, S&P financial, in it's already, I've called it a peak F. I will not know it's a peak F until it breaks under. If it breaks under and closes any week, it doesn't even have to be a monthly chart, but any week, if the XLF closes anywhere under 20.50, I'm going to have to say that everything about this looks like an F. But at that point, doesn't mean to say you can't recycle, but if you recycle, you've got at least 12 months before you can get to a D again if the normal up and down market occurs with higher highs. So let's just keep it in mind. There's a possible peak F. There is a peak F in the monthly, but so far the candle is not from last month to so far this month. The candle of the XLF has no look about it at all of a peak F. It should have been a lot lower by now. So I'm keeping that in mind, saying, hey, there is the chance it recycles. The 200-period moving average is like a magnet, and I don't think the XLF is going to break down without coming back to retest the 22-23 level. So I'm keeping that in mind. So now let's go to the S&P. SPX is a little bit behind. It's in leg D. But once again, and I was sent a fabulous article yesterday. I didn't quite finish reading it. I will finish reading it later in the day, explaining how many billions of dollars is needed for each S&P block, and I can't remember if it was 5 points or 10 points, whatever it is, but to be able to buy. So it's just taking up more and more, and there are fewer and fewer of dollars, and that's saying fund managers are becoming stretched in trying to put money to work. So the S&P has done nothing yet to give me, on the monthly basis, to give me any idea other than that the MACD is flattening out a little bit. The S&P is still at 95%, except that my on-balance volume, A, B, C, D, E, has gone to a peak F, a potential peak F, if it continues pulling back in May. And that says, got to be careful. Now, I want to add something that you haven't asked me about. I consider it to be important. Have you got a moment?
Yeah, I got all day.
Okay. The XMI, which I love to use as a complementary index. It used to be my top index that I followed all the time, and it was fabulous for trading options. And then it just got thinner and thinner until people just forgot all about it. But what's beautiful about it is it has a real mix of, I think it's only 10 or 12 stocks or something like that. I should have it right in front of me. I meant to print it out last night and I forgot. I've got to print it about 10 times. I just can't find where it is. It is, in fact, a mix of the conservative kind of defensive stocks. I think it has either Philip Morris or Mondelez, one of those, and it would also have maybe a cyclical, maybe like a Bank of like a Boeing. So it's a real mix, and it's held very well so far, and it's gone to an all-time high. So we've got a break coming up. I'm going to finish this thought because all I can do is say to you, we have to go step by step. The
Sure.
daily has probably given us a sell signal in most of the indices, the big ones, and we're going to see how the week ends, and then we can go from there. So I'll be back with Mike in Ormond Beach looking at the Dow, and then George in Atlanta.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back, and we are back with Mike in Ormond Beach, and I just wanted to finish this up because we are looking at something that could turn out to be something more significant, but at this particular point, look at the New York Stock Exchange. I think it's 1,860 stocks. Holding the 9-period moving average, nothing in the monthly chart is even hinting at this particular point of anything other than maybe a little modest pullback. 10,223 is the 9-period exponential moving average. That wouldn't be the modest pullback I'd be looking at. I'd be looking at a break of 10,450-ish, would say now you can start looking towards that. So that would be the first level of support. That's number one. Number two is the MACD is starting to narrow between the 9-period differential and the slow-moving average, and the relative strength is much weaker. But we've seen that the relative strength can be weak for a long time before you get an actual turn down. It happens that way. Now, for me, the on-balance volume is key, but I can't do anything here because I don't have volume on this at all, so it's just a flat line. So I have to look at the slow stochastic and say, aha, there's that M pattern. That M pattern says if the New York Stock Exchange Composite Index takes out, now I have to go to the weekly chart, smaller time frame. You see, I've spent so much time on this. I really do have this as leg C in the weekly chart. I just haven't been able to figure out A, B, C, D, E, F. Maybe it's a G/C. I don't want to say anything just yet. Let the week finish at the end of the day today, and let me spend some time of the weekend. But in the meantime, if the New York Stock Exchange closes under 10,450, That'll also be a decisive piece of the 9-period moving average of the weekly chart, and we'll go from there. But the way I'm looking at it, there should be higher highs to come in the weekly chart of the NYA, as long as it holds steady and the stochastic it remains in the 80% area or higher throughout any correction that we're undergoing. The daily chart has gone to a sell mode because the MACD, the stochastic, have all turned down, and it went under the 9-period moving average yesterday. So I probably at the end of the day will put in a down arrow. So let me sum this up and say to you, at this particular point, I have signals to say that there is a correction that is a little different to the rotational correction because it's involving more stocks going on right now, number one. Number two, this counter trend bounce that I anticipated through my Chapman wave chin gauge yesterday, which said that sometime between today and Monday, there should be about a 9-point gain in the E-minis, which should translate into the cash indexes. I think that's already starting to unfold. And it is options expiration. They've done all their testing of the downside. So, Mike, this is going to be my recommendation. I think those are the indexes that you were talking about, right?
Well, yeah, pretty much the major indexes, the Dow.
Yeah, these are the major indexes. As far as I'm concerned, I believe that a correction is unfolding. I'm calling it a correction right now. I can't call it anything more than a correction. I'm not saying it's a major sell. I am going to suggest that if anyone has a portfolio of indexes or something, a pretty decent portfolio, and they want to protect themselves, maybe you can. It's a horrible instrument, something like the TVIX. It only works when you're really undergoing selling pressure, but it might be one way of just having some kind of insurance. Or you could buy an inverse of whatever you have the heaviest amount in. Maybe it's the New York type stocks, maybe it's the S&P or 500 or the QID, which would be the NASDAQ, and you could just have an inverse in a small proportion as if it's insurance to cover maybe a good percentage of the price loss that you would get on a sharper pullback in the market. And this would bounce up to the upside, and it means that if the market goes up, you won't make any money. But if it comes down, you're at least protecting your core positions. I hope that helps you.
Yeah, and I know you've been talking about getting close to a socioeconomic top, and fundamentally, I keep seeing more and more advertisements for all these supercars from McLaren.
Unbelievable.
And Ferrari.
Actually, I had an incredible experience yesterday. I'm going to just briefly talk about it because I want to go to George. He's waiting patiently. A friend of mine I played tennis with, I walked with him to his car yesterday, the day before, and lo and behold, it's a Bentley, the 2-seater Bentley, a silver convertible. He decided finally that his daughter's finished college and she's working, and it's just him and his wife, and he's going to spoil himself. So, these things are happening. It's unbelievable. I couldn't believe it. It's a beautiful car to sit in. It is a fabulous car, but a little expensive, I'd say. But it is happening more and more. And what's interesting is that we're in a period now where people who normally would not be showing off their stuff are showing off their stuff. I'll talk a little bit more about it next week. Hey, thanks so much, Mike. And we'll talk again, but that's my outlook right now. Make it real clear. If the Dow breaks 16,000 in the next 2 weeks, we will be going down deeper, and that's part of what I'm seeing here as the rotational correction with an emphasis more on the weak sectors, and it's bringing down some good stocks as well. So thanks for calling. Have a great weekend. Let's go to George in Atlanta. Hi, George. How are you?
I'm looking for ABX. If it's a buy or it's going to hit the low again, because you have some volume.
I had such an interesting. I've had what a week I've had. I was doing my exercises at my cardiac therapy program yesterday, I think it was, and lo and behold, the guy doing his the same contraption that I'm working on, he's next to me. Turns out that he was the CEO of a company back in the 1990s, I'm trying to think of the name, which eventually went, they paid out all their debts and everything, and Icon had made an offer for them. It's a fantastic story. However, he was telling me that he kept telling his board that he wanted I can't remember whether it was Newmont or American Barrick. And
they
this
had
is
a secondary offering.
the 1990s. I'm sorry, what?
No, they had a secondary offering at 1835 last November.
That's what I saw someone in the den mention that. I think someone in the den mentioned that. So now what I'm looking at is if I go back to American Barrick, right here, ABX is a symbol trading at 16.65, down 21 cents. Went to a peak E from the lowest, most identifiable low bar in July of in the summer of 2008. Went to a high of peak E, then just a nominal new high peak F in the summer of 2011. And then it came all the way back down, and it took out the left side low in the 18s, and it's gone to a low so far last year's summer low. Summer seems to be important to the stock. So that was July. It went to 1343, bounced to the 9-period moving average of 2145, and now it's pulling back in the H that goes to an M pattern. So let's talk about patterns for a moment. First of all, that secondary offering was yesterday, and then today, instead of bouncing, which often... Was it today? I'm sorry, is that today? Oh, we lost you. Can you call back, George? Because I wanted to hear something about this. Sorry, George, that we lost you. It was probably because I had him wait so long. George, I'm sorry. But I'm going to keep talking about this so you can listen to the archives. But most importantly, if you come back on, just shout out, or Al will say, we've got him back. First of all, I'm going to tell you not to do anything with ABX right now. I don't care about that secondary offering. It's been making lower lows and lower highs. I want to see it base for a little while. I want to see it establish some kind of a level, and that level hopefully will be a little bit above the previous low of 15.26. It's trading at 16.65. It doesn't sound like much, $1.25. Let me tell you, for stocks like this, it can either be a huge amount because it takes a long time to get there, or the gold stock can go right through support or right through resistance. In this case, the stochastic is at 8.41. It's not showing any strength. The MACD is the best sign yet, because this time on the pullback, the MACD has gone negative, but it hasn't expanded all that much, but it isn't ready. So here's my analysis. ABX is a stock to keep in mind. When gold eventually turns around and has a really good move to the upside, it should participate. I don't know. I know there's just this whole story going on with Newmont and ABX. I'm really not into those fundamental things. They go in one ear and out the other. I just look at the charts. Newmont Mining is also coming back. It's held better. I think out of the two stocks, it's probably a stronger stock. I'm looking only at chart patterns. But I'm going to suggest... And if George hasn't come back, I'm going to suggest, George, hold on. Why don't you wait maybe into next week, Wednesday to Thursday, in almost a full week? See if it can form a base. You're not going to lose anything in time or price. And I personally, I've looked at other gold stocks that have a way better chart pattern. So my answer to you is I would not touch it. The other answer, no, I would not touch it yet. I shouldn't say I wouldn't touch it. I wouldn't touch it yet. I want to see how it holds some kind of support. It's in trough A, B, C, D. I think this is E. And if it's in E, that's really where you should get some kind of support. I just don't see it, regardless of anything else that's going on with the stock. Let's see if it can hold. Give me a call if you see it trading between left side, right side, having made a low in the daily, bounced, come back and held that low, whatever the low is, in the next week, or if it hits 16.68 to 16.68 to 16.78, somewhere in that area, just give me a call and let's see if it's now starting to, where it would be holding as a support level. That's the best way I can do it. I must see a turn. Right now, lower lows and lower highs. I don't know when it's going to stop. I want it to form a base. So I hope that helped you. And so here are the things that I'm watching. We've got a very interesting market in the sense that you've got high-grade copper. High-grade copper is in at a peak C. I believe this is a C. Yep, it's a C in the continuous contract. The actual June contract will be Yep, that's C as well. It could be F. No, I'm calling it a C for now because the stochastic's holding very well. So this is peak C. It should go higher. And if high-grade copper goes to, this is the contract itself, if it goes to 3.188, there's a good chance it's going to try to test that 200-period moving average. Now, copper holding like this should be a good sign. And if that's a good sign, it says that maybe the economy is doing some kind of a positive turnaround. I don't know. I'm just saying that's what I'm thinking. So that's something I'm going to be watching real closely. I'm going to also, there's a question in the den, the troughs from the high in the 300-minute NQ. This is A right there. A. It's only trough B. If it takes out, and I got a C. I could call it a C1, C2, but really so far it's a C. It's not even a C minus yet, which is very interesting. But it has to take out 3540.25, the 300-minute chart of the NASDAQ 100 June 2014 future. So that's it. But the 120-minute chart gave a beautiful signal. So it's funny, sometimes, very seldom does it miss, and in this case it did miss. Here is the NQ. Let me just show you. NQM. Look at that. Beautiful peak E. Absolutely spectacular because it coincided with the E-minis. So, and on the downside, in this particular instance, what we're looking at is trough A, trough B, trough C. On the downside, we call them troughs C, and that's a D. Okay, now, is it going to retest that, or is it going to be a successful right side pullback and then start to move up? I don't know. So far, this is an A minus right there. So we'll see. Okay, I hope that helps you. And yeah, so here are the other questions that a question I had. Oh, a very good email suggested that, yeah, and this is something I discussed before. Basil, I've been following the TVIX for a while now. I must say that it acts very strangely in that it often does not come close to performing as it is intended. Yesterday was a great example. How can the VIX rise over 8% and the TVIX, which is supposedly tracking twice the VIX, couldn't rise more than 6% and then only rise 3% for the day? I'm not sure why it happens, but do know that the risk of it dropping in the event VIX does not rise does not seem worthwhile the upside in trading it. Just my 2 cents. It's actually worth more than 2 cents because the TVIX now is $5.15, even less than when he sent this to me. I absolutely agree. And the best time to trade the VIX is as we're starting to go into that final collapse of the market, as it's going to that moment where the newspapers, they've got the cameras ready, they've got the video, they've got their best reporters right standing outside the New York Stock Exchange ready to interview somebody to say that Dow fell 6,000 points today, and then what happens is it turns around and goes up because the VIX hit a major high and then reversed. But that's when you get the biggest bang for the buck. But you got to be in it. And that's the tough thing to do. So what I do is I just get it as a little tiny part of a portfolio, and I just hang around. I just say, hey, that money is just lost, but it'll more than make up for it when it comes right. And that's just the only way I can deal with it. All right, I'll be back. We've got one segment to go, and I'll be back. This is Friday, and, of course, Nico and, what's the question of the den? Yeah, you want to hear Nico straight after this. I'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Learn about good health and fitness. Living a Primal Lifestyle with Nico and Paige. Next on TFNN.
I've always had a question about Philip Morris, Altria Group. I believe this is the tobacco part of the company, and that Mondelez is the other, the food. I think I'm right. Just doing this real quickly. A, B, C, D. A, B, C, D. And this could be an E or an A. Okay, so this is part of that defensive group that in times like this, people drift, they gravitate towards defensive stocks. And in this particular case, MO trading at 40.50 is up 0.44, up 1.10%. That is important to note because it says 35.86. Yeah, it tells you that, yes, in fact, it is being deemed appropriate to go into the defensive area right now. And as a result, what we're looking at here is that I have a question as to whether the daily is recycling and it's going to go to leg B above 40.64, or that's an F. I'm watching this real closely, but technically the price is holding extremely well, part of the defensive group. The weekly chart, I got alternate wave counts. It doesn't really matter what the wave count right now is. The MACD is at 96%. So the MACD is very strong. The stochastic at 96%. This is really nice action. It's a stock that's holding very well. So, I know I get emails from people saying, we very seldom actually, but I think they understand my point of view. If you're in the market to make money, if you're going to do a moral test on all the different companies, hey, and there might be much fewer stocks to choose from. I'm in price. I do price analysis, technical analysis. That's important. If for moral reasons you aren't prepared to buy more, fine. But I'm looking at the stock, and if it's going up and you want to make money, this is one way to do it. You know, after that, you can donate whatever you want with your profits to anti-smoking, cancer, whatever it is. But this is a chart that so far looks very good and is holding well. High-level consolidation. If it breaks to the 40.80 area, to the 41.30 area, it could in fact be saying, hey, I'm going higher right here, while the other stocks start to take on some real heat. So let's do this because we're going to run out of time. We've got Nico and Paige coming up. It should be a wonderful show as always. That's number one. Number two is you've got programming all day, so stay tuned. And you got a wrap-up at 4 o'clock to 6 with Tom O'Brien. And then Tom interviews Dave White, our technical guru, with everything electronic or computer-related. Just these, the wealth of knowledge is just, it's tremendous. So I recommend that you, and of course Tom, with all of his technical veracity and everything that he discusses in terms of volume, as you heard this morning in the show with Daryl, my recommendation is stay tuned. So I'm going to do this right now. I'm going to make it real easy. In the Dow, which is just down a tad right now, it's down 3 points, S&P's unch. I'm looking at this chart right. This is intraday, just a little fun. We went to a peak D. Oh, we did it. We went to a peak D. We didn't go to the left side, right side price time match, but it did go to a D in the 5-minute chart, which just appeared right there. That's a D, and it's still holding quite well. I'd say to subscribers, if we were going to match, now let me go to the chart that I'm looking at here. This is the chart I show my subscribers every single day. It's called my Dow chart, and I said if we are going to match the third day after the April the 4th decline from 16,631, the previous all-time high, then we might see a doji. If that doji represents the same kind of candle we're looking at here on the 8th of April, that's unfolding at this particular time, although we didn't make a lower low, there's still a chance, and this is going to be really important, that there's a pop-up on Monday. If there is, we've already used up that, at least part of that technique I talk about, Chapman wave trend gauge. But if in fact we do rally, we've got to watch carefully, because a rally above 16,580 could be quite important one way, and a breakdown on Monday below 16,350 could mean something else. Those are the parameters to watch in the short term, and watch the volatility index. The volatility starts trading in the 1360 to higher area. That's going to be a negative. Hey, have a wonderful weekend.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.